Hey, how's it going, everybody? Mike Weber here, your Los Angeles real estate broker, here with your market update for the beginning of November 2021. So we are starting to see a little bit of a slowdown in the real estate market in many parts of greater Los Angeles, as well as other parts of the country, against a backstop of extremely low inventory, which has existed really kind of since beginning a few months after COVID, and is kind of stuck with us throughout that entire time up until now. And of course, with interest rates, mortgage rates rising slightly, and with the potential for a lot of very serious changes to come for the housing market if the Federal Reserve should in fact start to do any sort of serious tapering, or if more importantly, they actually do raise interest rates sometime in 2022. So we'll have to see what happens there. But let's go ahead and get started. We'll take a look at first an article that came out today that talks about some problems that Zillow's having, and then we'll jump into the actual data in Los Angeles County, and then we'll take a look at the South Bay beach cities. All right, so getting started, I wanted to share this article with you guys. This is an article about Zillow, whose stock is dropping because some analysts did some research. So what they found is that in several markets throughout the United States where they studied these home purchases that Zillow's been making over the last year and a half, whatever it is, a good percentage of those properties are actually underwater, meaning the price that they paid for them is higher than what they're being listed at. And one of the things that I didn't see covered in any of these articles that I read about this subject is that really they have all kinds of transaction costs in addition to this price difference. So now, of course, they do charge sellers when they purchase a home a fee, and so that probably factors in as well. But of course, there's purchase costs, escrow fees, property taxes, all the repairs that get made. There's carrying costs as the property sits there, while they're working on getting stuff done. There's selling costs once they relist the property and have to pay for escrow and title and any repairs and things that are negotiated again. So there's a lot of costs that are not being factored in. And even ignoring all of those costs, what we're seeing is in several markets, they're actually in a position to lose money on a large percentage of all of the homes they purchased across the United States. Now, in fact, about a week ago, the news initially broke that they were going to pause all home purchases throughout the rest of 2021. And then, of course, in the last day or so, this additional, more detailed news came out that really elaborated on the problem. And so I think this is definitely indicative of what's happening in the market across the country. And one of the markets that they are actually upside down on a lot of these homes is San Diego, as you see here. Another one is Phoenix. Another one, Mesa, Arizona. Of the 650 homes they analyzed, the cities in which the company had the highest percentage of homes that were listed below the purchase price were San Diego at 94%, Phoenix at 93%, and Mesa, Arizona at 92%. So this is clearly showing that the market has actually not continued to rise in this last 6 months. And we've been kind of seeing the trends and talking about them on this channel. It wasn't certain to me because we saw a couple months where prices were kind of gradually falling. But now I think it's starting to become cemented that there is some weakness in the housing market. And I think a lot of it is going to depend on what happens with the Federal Reserve in terms of this potential for tightening or interest rates rising in the future. There's been massive support propping up the housing market for a very long time. And if that should change next year in 2023, I think all bets are going to be off for the housing market. All right, let's go ahead and take a look at what's happening with the actual data here. We'll start out here in Los Angeles County, and what we see is overall, we're still seeing pretty strong price growth from a year-over-year standpoint. We're up 9.3% compared to a year ago. Now, this is after prices were just going totally stratospheric for, what seemed like forever. But then now things have turned, and we've just seen this continual tapering off month after month after month. And now we're up a modest 9.3%, which is probably more along the lines of what we would typically see, in a typical real estate cycle, albeit over these last several years where we've had a ton of price growth in the real estate market. Now, if we look at the supply of inventory, This is where it gets interesting because that is still remarkably low, historically low, incredibly low. And even with no inventory on the market, prices are starting to flatten out. So that should tell us that the frenzy to buy these homes, the aggressive purchases, yes, there are still some out there. It depends on the property, depends on the market, but across the board, some of that activity is definitely starting to slow. Finally, for Los Angeles County, if we look at closed sales, we see still strong. So nothing to get too nervous about there in terms of people are still buying homes. Stuff that's getting listed is still selling. It's just not selling at, continuously higher and higher prices like it was for the first 6 months of this year. Now, if we look at the South Bay beach cities, we see a different story. For all the information that's being processed through this board of realtors, look what's happened. Now we are almost even, just 0.8% growth in median home prices compared to a year ago. So that's certainly not a good sign. If you go back here to October 2020, we were at 860, and now we've fallen to just 867. So all of that crazy price growth that we saw has kind of fallen back down to where we were last year. So that's definitely interesting. Of course, it could just be a one-off, something that we see maybe just over the holidays, and things could start to rebound early next year. But again, a lot's going to depend on what happens with the Federal Reserve going forward. But certainly for a lot of people that were expecting to get a lot more money this year, at least in the South Bay, depending on where you're talking about, the value of those properties is kind of flattened back to where it was last year at a similar time. Again, inventory here in the South Bay, same thing as Los Angeles. There's no inventory, virtually non-existent. So again, that's showing you that people are not as excited to pay higher prices to purchase the already extremely low supply of inventory that's available in the South Bay beach cities. And then finally, if we look at closed sales, we see nothing's out of the ordinary there. We still have very strong closed sales, albeit with prices falling substantially over the last several months back to 2020 levels, which means people are not getting those huge amounts over asking across the board when you look at all the data as a whole, although certain properties, of course, are still selling. There are, crazy multiple offers that's still happening. So I think this is very interesting. Definitely, we are seeing signs things are cooling off. It's not the same as it was 6 months ago or a year ago. And again, we're going to have to pay close attention to what happens here in these next 6 months as we find out if the Fed is really going to start tapering asset purchases and potentially even start raising rates, which will affect mortgage rates and will really, really put a damper on the housing market. All right, if you haven't subscribed already, go ahead and do so. If you like the video, give me a thumbs up. And if I can help you with anything real estate related, don't hesitate to reach out. I'm always a phone call away. Appreciate you guys watching, and I look forward to seeing you on the next video.